Hey everyone, welcome back to Yuri's Box. In this video I'm going to talk about how to survive a bear market. If you like this kind of content, consider leaving a like and subscribing to the channel. And as usual, nothing in this video is financial advice. So really the point of this video isn't to say that we are necessarily in a bear market. I've made that clear in my previous videos. I still maintain a cautious outlook on everything. And my base positioning right now, as far as I'm concerned, is to avoid doom posting in times like the ones we're living in right now, and just wait for the data and wait for policy to tell you what to do next. All right. So it's a really fluid, environment right now where a lot of things can change on a short time's notice. So this isn't, again, to say that we're in a bear market. I'm just saying, what are the things you need to be careful about, during a bear market? And really, I'll go to the drawing board. All right, I'll use TLT's chart below as a drawing board. So imagine, before we talk about a bear market, really, the best way to visualize and to think about what makes a bull market, in my opinion, isn't necessarily the fact that, yes, of course, prices go up. All right, in a bull market, prices go up. But what really makes a bull market are these short-term pullbacks. All right, because what makes a bull market, in my opinion, is the fact that everybody keeps trying to go to the top. And this is something that I've really absorbed from the Crowded Market Report, Jason Shapiro. I'm pretty sure I have his profile linked in my bio. I'll check just in case. But this is something he teaches very, very well. And I'll do my best to kind of drive the point home for you as well. So definitely check him out. But again, what makes a bull market? Everybody keeps trying to call the top. All right. Apparently, price having gone up is a good enough reason to short it. Apparently, just because the price went up, it means it can't go up any further. And sometimes, the short sellers get their 5 minutes of fame, but it just resolves to the upside. No biggie. And the best example I can show you is what we saw. I still have the drawings from last year. There you go. Is really what we saw from the October low till March and April. Trend is up, but as April comes around, we have this, what is this, a 5% correction? Something like that? Yeah, 5-6% correction. Short sellers had their 5 minutes of fame, and really, what caused this correction, if you were paying attention at that time, was the fact that right here we were at peak hawkishness on the Fed, because what accompanied this move up was upward surprises on inflation. So we had to price out basically all the rate cuts for 2024, and this is what led to that short-term correction in the S&P 500. But again, look at the drawing board. Everything goes back up. No biggie. Same thing right here. What happened here? This was the first part. I'm saying first part in case we get a second part of the Japanese carry trade getting unwound, and all the panic that ensued. Right. We also had, some hints of the U.S. economy starting to slow down. Okay, with a downward surprise on the non-farm payroll print on August 2nd, if I'm not mistaken. Right here. And this led to, if I'm not mistaken, this was a 10% correction. Yeah. But eventually, even in the face of that, we had a lot of things going on, and then eventually the market went up. All right. So again, the way you have to think about a bull market is the fact that prices go up, and in the face of prices going up, everybody keeps trying to call the top. All right. And that is the best way to get blown out of the water. trying to call the top just because the price went down. I mean, the price went up, sorry. And it can't go up any further because it would be ridiculous. Yeah, well, things can get very ridiculous. And I think that the saying goes, the markets can stay irrational longer than you can stay solvent. So I would keep that in mind. On the other hand, what makes a bear market? Well, a bear market is really kind of the opposite. You have an overall trend that is lower, but people keep trying to call the bottom. All right, so what you'll see is first decline, and then, first hint of a bottom, and apparently prices going down, or prices that went down, are a good enough reason to long it, to go long. And this is kind of, the mistake that people on the short side do in bull markets. Just because prices went up doesn't mean that they can't go even more up. All right. This is the equivalent of what happens in a bear market. Just because the price went down, say 20%, doesn't mean it can't go another 20% lower. All right. As I think that was Peter. I don't remember this. A famous investor. I remember reading this talk, listening to this talk. Peter Lynch. That's his name. Peter Lynch. During a talk, he was saying, one of the biggest mistakes, retail investors, I think he was talking about, that they make is thinking, oh, the stock went 40% lower. How much lower can it go? Usually the answer is another 40%. Okay, so just because prices went lower is not a good enough reason to go long. And for that, I defer to what we saw in 2022. Right? I think 2022 is a fairly good example of this. And I'll give you another example in just a moment. You have, price lower, go long, then price lower, go long, and you get the picture. So again, the problem with bear markets is that, yes, they're kind of the equivalent of, the opposite of a bull market, but in reality, they're even worse. Because here's the thing. The way you have to envision a bear market isn't just a bear market. The bear market is the overall trend, meaning this right here is the overall trend. But in the bear market, you have bull markets and bear markets. All right, this is the way you have to think about it, in my opinion. This right here is a small bear market, and what follows is a small bull market. And again, you can start to see the pattern: bear market, bull market, bear market, and another bull market right here. And the problem is that bear markets have the nasty habit of humiliating everyone. All right, no one gets spared in a bull market. All right, the only way if you want to try and stay sane and sleep at night, the best way to do it is just, for example, either ignoring everything or holding on to cash, which is kind of the equivalent of ignoring everything. But if you want to try and stay sane in a bear market, you really have to consider the fact that you're in this overall trend out here, rather than rather than getting caught in the crosshairs of these erratic market shifts that occur in a bear market, right? Because what will happen, let's clean things up a bit. What happens usually, and it's something that can really wipe you out financially, is that, say this is your typical bear market right here. What will usually happen is that, say you go down the first 20%, and you say, what, I think this is the bottom, right? So you go long right here, and on the way up right here, you feel like a genius. I picked the bottom, great. But things turn over, all right? Things take a turn for the worst. And if you really if you really let a bear market get to you, what will happen is you'll sell right here, because you'll just capitulate and say, oh, you know what, I can't take this anymore, I need to get out. But then the prices reverse and they head higher. And again, if you're really letting the bear market blues get to you, what you'll do is you'll buy back here, because you say, I should have bought it right here, now I have to get back in because the prices are going to skyrocket. And then the prices just keep crashing on, and you just get stuck in this, buy low, sell high, buy low, and sell high environment, which is just the worst thing you could possibly do in a bear market. And again, this speaks to the fact that from really managing, risk, let's call it risk, okay? Managing risk during bear markets is an entirely different sport as opposed to managing risk during a bull market, because overall in a bull market you don't have those wild swings. Yes, you might have a 5 or 10% swing, but it never really kind of makes you second guess yourself, because the most you'll get is, the most common kind of correction you'll see is maybe a 2%, 2, 5, 10% if, there's something, funky going on. 20% is still not enough of a reason to call for a bear market, in my opinion, although, you're kind of flirting with it at that point, simply because, there are occasions where you get, 20% corrections and you are still in a bear market, all right? But again, this isn't the point of the video, whether to say that what we've seen right here, this decline of about, this was a 21% decline. I don't know if this is a bear market or just a correction. Time will tell, honestly. But to drive the point home, really, I want to look at 1929, right? And I'm obviously not saying we're living through 1929. I'm just making the example of the best kind of example of what a bear market is. Because from the peak, right, it was 32 on the index. In September was this? Yeah, September. We have a 45% decline. All right. It's a bear market. It's things, I have to sell everything. But what happens from then on? From that 44% drop, from the bottom right here, you have a 46% rally. All right. And what I want you to think about is, what would it have felt like seeing this kind of a rally back then? We're just going back to all-time highs. This is it. Buy. Sure enough, after that you get another 44% drop, and after that you get another face-ripping 28% rally, and all the way down. All right. So the way you have to imagine it, again, isn't so much the crash, because whenever you think about a bear market, you think we went from point A to point B, point A being the high, point B being the low. The problem with the bear market it's that you usually don't get from point A to point B in a straight line. What usually happens, as I've been pointing out, is that everybody gets humiliated, because the people that have been calling for a bear market, that I've been saying that we're potentially in a bear market, occasionally you get these wild rallies that are just insane. All right, this one back up here was about 44%, if I'm not mistaken. If I remember, 45%. Imagine being a bear during this kind of rally. All right. And imagine then being a bull during this decline. It just makes a fool of everyone. All right. So the way you have to think about bear markets is the problem with bear markets isn't that you get from point A to point B. That, of course, is the overall trend, and that alone should worry you. But the problem with bear markets is what happens in between, because what happens in between are small bull markets and small bear markets that, alternate between themselves. So again, this would be your, small bear market, then you have a small bull market, and so on and so forth. So what should you do in the case of a bear market? Well, I think coming back to today's drama, I think if there's one thing that this decline has taught us, is that hedging is never boring, and it is always better to be prepared, even though it might seem the wrong thing to do, because everything just keeps screaming higher. Because, again, you'd never know what will happen in the future. Now, granted, if, personally, I was looking for bonds for 2025, and I personally still am. I was honestly maybe a bit too optimistic on what we've seen this last week. I basically said I wouldn't be surprised if this kind of reverses immediately. Probably was a bit too optimistic. And again, I'm still in the camp that this is probably some kind of liquidation event. I've been trying to read a lot more on the basis trade, and I'm still kind of trying to get up to date with it. But regardless of what you use for a hedge, I mean, it could be cash, it could be gold, it could be anything. It could be anything. Just something that gets you ready for the downside. All right. And while if you're in a bear market, again, still a big if, try not to call the bottom. There is no need to be a hero. There's no reason why you have to be a hero and call the bottom right here. This is the bottom, and this is the bottom. Now this is the bottom. Because again, if it is in a bear market, well, then the market will still be here a month from now, a year from now. All right, you still have plenty of time to make money. You don't have to catch the falling knife. You don't have to catch the bottom. Nobody catches the bottom. All right, and it's always better to be, to have capital available to be able to make money in the future than just squander it all now because you absolutely have to catch the bottom and you're obsessed about catching the bottom. All right. So that's really my 2 cents on bear markets. Try not to get caught in, I have to catch the bottom. It really is about realizing that potentially things are just playing out like this, lower lows, lower highs, no need to overcomplicate it more than that. And again, just to drive the point home, the problem with not overcomplicating things and really keeping things simple is because, again, while the overall theme is a bear market, living through these shorter time frame movements really feel like smaller bear markets and smaller bull markets. So at the end of a bear market, everybody is kind of liquidated. That's why bear markets are so brutal, and that's why it's always best to do nothing. All right, if you haven't hedged and you get caught swimming naked, as they say, unless you're using margin, when again that's that's another set of problems. But again, that is the reason why I do not like to use margin. I don't like to go out and short and long. I just buy spot, because I make mistakes. Everyone makes mistakes. I don't want to get blown out of the water in case I do. All right. So that's just my 2 cents. And probably the last thing I would say is something that I've been reiterating this week, and that is avoid the doom posting, because when you're in a bear market, usually something bad has happened. All right, something negative has happened that makes a bear market possible. And in outrageous times, outrageous theories sound normal. And so it is very, very tempting to listen to doom posting about whatever. Now it's what we're living through. Bonds are getting blown out of the water. And it's because, half of the world is selling all of their treasury bonds, and, we're going to 10% interest rates on the US debt. Again, could happen. Again, I've been saying for the last week that just because something sounds ridiculous doesn't make it impossible. Granted. But the problem with doom posting usually is that it always, you never really think about the consequences. One of the things, and I promise I'll finish the video on this. I always talk about Bitcoin. Something that they say about Bitcoin. What if the internet goes away and you can't access your Bitcoin anymore? And that is really, an extreme example, right? What if the internet goes away? But you have to really think about what it is people are proposing there, because if the internet goes away, it arguably means that something terrible has happened. And as I said in my previous videos, if the internet does go away, meaning that, permanently, well, in that case, you're not talking about, what do I want to invest in? The S&P 500, small caps, China, Japan, Bitcoin. The only thing you want in that environment is farmable land, water, and a shotgun to defend it all. Again, okay. So doom posting is tempting, but I would try to keep a level head as much as possible. And eventually, if it is time to panic, and the headlines will tell you. Until such times, I would keep a level head and look at the past for direction, right? Don't get fooled. If this is indeed a bear market, I would not go around trying to call the bottom, because that would be just as foolish as people trying to call the top in bull markets. If you like this kind of content, consider leaving a like, and I'll see you next time. Bye.